All right. So this is a question that I get asked a lot. And of course, I know people in the real estate profession will also tell you the same. Uh, where do we get started on the home buying process? The question that everyone always asks when they're first time home buyer, they have no idea what the process looks like. They've never been through it. They may have seen their parents go through it or maybe their friends and family, but they themselves have never experienced it. So it's a relevant question. Where do I get started? What do I do? How do I get started? What's the first step? Right. And a lot of people will have different opinions. I'll give you, I guess, my guesses as to what certain people may say. A real estate agent would probably tell you, well, you need to talk to a real estate agent first, right? Which makes a lot of sense. Real estate agents, that's their job is to help people buy houses and, of course, navigate them through the process. If you speak to a loan officer like myself, we might actually tell you, well, you should talk to a loan officer first, right? Well, that actually makes sense as well because you don't know what you can afford to buy unless you get pre-qualified. So, what's the real answer? Like, where do you get started? My opinion, my philosophy, my theory is that you should actually get started with yourself. Okay. And what I mean by that is you need to look at yourself as a home buyer and think to yourself, are you ready to buy? Okay. So, how do you figure that out? Well, there's a few things that you should consider. Number one, are you ready to get involved in probably the largest, most stressful, most emotional, most financially risky, and I'm using that word risky, financially risky transaction you'll ever encounter in your life if this is the first time you bought a house. And when I say financially risky, I'm talking about you're going to be spending a lot of time, energy, and money, right, in trying to accomplish this goal or process, right? Buying a house is not easy. It's not like going to Amazon and ordering something online. It's not like going to the grocery store and buying a bag of popcorn. It is a very complicated, very involved, and very demanding process. So, are you ready for that? Are you ready to get involved in something like this? Let's say you are in a situation where life is very busy. You're really busy at work. Maybe you're planning a wedding. Maybe I can't speak on women, but maybe you're pregnant. Maybe you have to have a child. I don't know, right? There's certain things that can take your focus away from the home buying process. So, are you in a situation where you're able to put your time, energy, and money into a project that may take up to 30 to 45 to 60 days or longer? Right? That's the first question you should ask yourself. Now, there's other things that you should ask yourself, like, can you afford it? Do you have the income? Do you have the funds? Right. Also, where do you think you are at credit wise? Where do you think you are in terms of your ability to qualify in terms of your credit history? Right. Are you confident? Do you know that you are perfect credit? You have 800 credit scores, or do you know that you're kind of shaky? Do you know that you're might have a little bit of a little bit of flaws that may prevent you? Right. So that is something you should take into consideration. Also, do you even have the actual will, the motivation to get in the home buying process, right? Thanks for your comment, Christina. That's pretty funny. Christine, that's pretty funny. So I'm going to share you some questions that me as a loan officer, I ask my borrowers. Why? Not because I'm saying that you should talk to a loan officer first, but I'm asking you these questions because I want to know if you're actually ready. And I know of real estate agents who ask the same questions. We call these pre-qualifying questions, right? But they're not really pre-qualifying you in the technical or official stance where you're getting a letter to make offers, but pre-qualifying meaning like, are you where you're supposed to be at in order to even enter the realm of buying? And the reason why I'm bringing this up is because there's a lot of people who have no business buying a house, and I meet them every single day. I talk to them every single day. They do not they don't know what they don't know, so we can't blame them for it. But this is my effort to help educate them. That way, when you do get involved in the home buying process, you're prepared and you save yourself a little bit of embarrassment, right? So I'm going to share my screen real quick. to show you what I think you should be asking yourself, right? So I'm asking you these questions because I want to make sure it makes sense for me to push you to the next step of the process, which is having a full-on application, or a 1003 is what they call it, right? And that will actually pull your credit. Right. I want to make sure it makes sense for you to fill out this application, because it's a long application. It's something that you don't want to do for fun, right? You don't want to do it just for the hell of it. No, this is something that you want to do because you're going to get something out of it, right? So I want to make sure that we're in agreement that you should take this next step, that you should put out the time and effort and energy. Also, I don't want to pull your credit unnecessarily, and you don't want your credit to be pulled unnecessarily as well. So this is another reason why these questions are being asked. Again, I ask these questions not to really qualify you, but to make sure it makes sense to move to the next step. So this is something you can ask yourself before talking to me or a real estate agent to see whether or not it makes sense for you to even think about buying a house, okay? So the first question should really be about your work history. Okay. Do you have a job? If the answer is no, then you might as well stop right there, right? And stop looking at anything involving buying a house until you get a job. Okay. If you're on unemployment, that doesn't work. Okay. The next question is, how long have you been at your job, right? If you just started last month and you have no work history before that, you might have a tough time. Now, there's exceptions. Let's say you are a nurse, right? And you've been working as a nurse for a month, but you've been going to school, nursing school, for the past 4 or 5 years. We can use your nursing school as work history. So that is one of the exceptions where you don't have to have a 2 years work history in order to qualify, because your schooling is considered work history, okay? Now, let's say you graduate high school, you've never worked a day in your life, and you started mowing lawns, and you did it for a month. Well, you're not going to qualify because you only have 1 month of mowing lawns. Okay. And there's a lot more to it, but just so you know, you have no history of work. You have no history of going to school for mowing lawns, and you just start mowing lawns. You only have a month worth of history. You're not going to qualify. You need at least 2 years. Okay. For the most part. Now, income, this is also important. Now, why is income so important? Because we need to know that you can afford the mortgage, right? Now, if you're wondering how much income do I need, well, it really depends on what you're trying to buy, how much you have in debt and whatnot. But I'll give you a really clean, simple answer. Okay. Whatever you think the house payment is going to be, you need to make a amount where it's only 40% of your income. So let's say your mortgage payment is going to be $1,000. Well, you need to make about actually, you know what? That's actually kind of a bad example. Not a bad example, but it's just the math is not clean. Let's say you're trying to buy a house with a mortgage with a $4,000 mortgage payment, right? That means you need to make at least $10,000 a month. Why? Because that's 40%. Actually, it should be more like 30%, okay? So let's say it's a $3,000 mortgage. You make $10,000, okay? Then you qualify. Now, if you are trying to get a $3,000 mortgage and you only make $4,000, you're not going to qualify, okay? So the math or the ratio, what they like to call it, is 30% of your income. So let's say you make $6,000 a month, right? So what's 30% of 6,000? About 2,000, because 2,000 about 33%, right? So if you make $6,000 a month, you can afford maybe a $2,000 a month mortgage, right? That's on the mortgage itself, just the house, right? You also have to consider your other debts, like your car notes and your credit cards and whatnot. And they allow you maybe about 40, maybe 50%, right? So maybe half of your income can be tied into your mortgage and your debts, and you can still qualify. So let's say you make $10,000, well, you can have $5,000 worth of debts. That's really liberal. Okay, you probably should be closer to 4,000. Okay, so if you're making 6,000, then perhaps 3,000 or less could be considered a part of your debt. 2,000 that being your mortgage, and 1,000 being your credit card bills and whatnot. Okay, so if you're trying to figure out how much income do you need, it's about 30% of your income can be allowed for the house, and 40% could be allowed for the rest of your payments. Okay, combined with your your mortgage. Okay, so again, 2 year work history. Now we also have to look at whether or not you have W-2, salary, hourly, self-employed, and commission. The truth of the matter is, if you're commissioned or self-employed, you should stop the conversation and just talk to a loan officer right away. It's gonna be too complex for you to figure out on your own. Okay, unless it's really simple, like you've been mowing lawns for the last 20 years and you made $100,000 a year on your tax returns for sure, then that's simple. Okay, you have the history, 10 years, and you've been making $100,000 a year. Okay, maybe you can figure it out. But if you just started your business, or if your business you made like $100,000 last year, $50,000 this year, you didn't make any income the year 2 years before that. There's lots of math and things that we have to consider. So it's a little bit too complex for you to answer on your own. So you probably should talk to a loan officer. But if it's simple and clean, let's say you've been selling cars, you sold cars for the last 20 years, you've always made $100,000 a year. Okay, that's pretty simple. You probably can guess based on that. Okay, but if you just started selling cars and you used to sell lawnmowers before that, and you're thinking about selling helicopters, in the next year, and the income's all different, there's a base pay, whatever, just stop. Talk to the loan officer, and that'll simplify things. Now, if you have a regular job, when I say regular, hourly, salary, or W-2, then just do the math like I told you, okay? And actually, I think I have a slide showing you the math, okay? Maybe not. Maybe I can show you that later. Credit scores. Now, when I ask you what your credit scores are, I don't care where you found it. I don't care if you found it on Credit Karma. I don't care if you found it on your bank statements or whatever, or you actually had your credit pulled. I just want to know if you have an idea of where you're standing. Okay, if you have no idea, that's not necessarily bad, but it's also not good, because usually people with great credit, they know. Okay, what I mean by that is if they have perfect credit scores, if they have an 800 credit score, they know they have a perfect credit score because they're intentionally managing their credit. Okay, people don't get an 800 credit score on accident. They're actually purposely managing the credit. It's very, very rare for someone to have perfect credit and not really care about credit. No, they actually care, and they're putting time, energy, and thought into it. They're actually managing their credit. Okay, so if I ask a person what's your credit scores and you don't know, you're probably not gonna have perfect credit. Okay, now I might be wrong. Maybe you do have perfect credit, you just don't know. You're just that dumb and that lucky, right? But I'm asking because I want to know where are you in your credit management mentality. You might think that you have bad credit, but it actually might be good, or might be good enough, right? Christine says that she has 775 on accident. No, I'm pretty sure you're looking at a little bit, but I'll give you credit for being on accident, okay? But like I said, I think that people don't really know where they stand credit-wise in terms of buying a house, right? Because again, a lot of people say they don't have perfect credit or they have bad credit. It is better to talk to the loan officer to find out. But the truth of the matter is, you can sort of have an idea on your own. Okay, so ask yourself, where am I credit wise? If you don't know, time to find out. Okay, and there's resources you can Google online how to find your credit scores. I wouldn't recommend using Vantage scores because that's not what lenders use. I would recommend using FICO scores. FICO 4, 5, and 2 are the ones we're looking for, and it has to be mortgage related. You can go to myfico.com. There's a website, I forgot what it is, My Free Credit Report. So there's I'm not prepared to tell you what it is. Maybe I can put it in the comments later on, whatever, but there's a government sort of sponsored or government endorsed credit reporting system that you can get your credit scores for free every single year, and they would give you pretty accurate credit scores. Okay, so if you don't know where your credit scores are, you need to find it right away. Okay, the next question is, how much do you pay monthly on your credit card debts and car notes and student loans? So let's say the example of making $6,000 a month, right? Let's say you spend about $5,000 of that on credit cards, car notes, you bought a bunch of stuff from cons, it's all debts. Then you're not going to be able to afford a house. You're not going to have the extra money to buy a house if you're already spending a large portion, over 40, 50, 60, 70% of your income on other stuff. Now, if you're making $6,000 and you have no debts, no car notes, no credit card payments, well, you're in great shape. That means you probably could buy a house. It just depends on how much, right? So you have to take that into consideration. A lot of people, they'll apply and they're spending most of their money already on their car notes and their credit cards. And I'm like, where do you expect to fit a house in there? Like, you're making $5,000 and you're spending $4,500 a month on your debts. That leaves you $500 for a mortgage, and we're not even talking about food yet, right? So ask yourself that question, and I know it sounds common sense. Let me tell you about common sense, okay? I know it sounds like common sense what I'm telling you, a lot of the stuff I'm telling you. But if it was common sense, then why would we be having this conversation? Because a lot of people do apply when they don't qualify because of simply how much they spend, and it's almost like they don't know, or they're in denial. I don't know what it is, right? But it's almost like they're spending more than they're making, and they expect to add a house to it, right? And I don't know what they're thinking, right? And it's not that I'm questioning their intelligence or whatever, but math doesn't really lie, right? If you make $5,000 a month and you're spending 4,000 of that on your debts that you currently have, and this is not including rent, okay? I'm talking about car notes, I'm talking about credit card debts, I'm talking about student loans, I'm talking about all those types of things, right? You're spending 4,000 or 5,000. Where do you expect to add a house there, right? Like, how can you add a $2,000 mortgage payment there? Again, the math has to make sense. So, common sense is not so common. So if I tell you something, it sounds like, why is Larry telling me this sounds stupid? There's a reason why. Okay. People do try to apply when they really, on math, on paper, they can't afford it, right? So if you're wondering about credit scores, 580 is where we actually get started. 620, you can maybe go conventionally, but more than likely you'll go FHA. And 680 is where you're probably going to find the best situation possible in terms of rates and qualification purposes. Okay, so if you know for a fact that you're above a 680, you're in great shape. Great shape. If you're wondering, I don't know, then we need to find out right away. Again, you can have your credit looked at, whatever. But if you know you're below 580, you're like in the 500, 400s, then there's a strong chance that you're not going to qualify for a mortgage. Okay. And I'm always willing to talk to anyone and help them with their situation and kind of give them guidance. But you can't expect me to create a miracle and get you in the house if you know for sure you're below 500 credit score. Okay. So again, are you ready? Are you ready financially, but also you ready credit wise? Right. Debt to income ratio. This is what I talked about earlier. 40% of your income is the rule of thumb. When I say 40%, I'm talking about 40%, including your house and your debts. Right. Again, car notes and credit cards and such, plus your house. Okay. So 40%. So easy math. If you make $1,000 a month, $400 of that can go to your debts. And the reason why I don't use that example, because no one has a mortgage that's $400, and if you're only making $1,000 a month, buying a house is probably the last thing you should be thinking about doing. Okay, so I use 10,000 because the math is a lot easier. 10,000 a month, 40% of that is 4,000. I guess I can use 5,000 because 5,000, 40% would be 2,000. Right, so that should be pretty easy math. If you're making $5,000 a month, which is $60,000 a year, which is not a bad living, you can afford $2,000 worth of debts. $2,000 that includes your mortgage payment and everything else. Okay, so how much can you afford in terms of a house? Use the 40% rule. Okay. Do you have funds prepared for the home purchase? Do you have a 401k or savings? Now, a lot of people, they don't want to answer this question. Like, I got some. The thing about this is, we're not trying to trick you. Okay, it's not like car sales. Okay, car sales, car sales. I used to sell cars, so that's why I'm using this example, right? Car sales may take advantage of the fact that you have extra funds, right? They might be like, okay, you have $10,000 to put down. Well, we're gonna use all $10,000, right? And somehow spin it in a way where you get the best deal, but they're also getting a huge profit. Okay, in the mortgage business, there's nothing like that. There's a standard down payment for FHA, conventional, USDA, VA, and all these other loans, right? There's a number that is across the board the same. Now, you might need more because of the qualifying purposes, meaning you have too much house, so you got to put down a little bit more, or maybe you got to put down. You don't have to put down more, but you have to have more in the bank for reserves because you have sort of a marginal qualification. Like, you're not quite there, but if you can prove that you have 6 months worth of mortgage payments saved in the bank, then they might be willing to take the risk with you. Okay, so they call it reserves. Right? So you hiding that information doesn't help the loan officer structure the deal properly, right? So I'm telling you all this because whenever you're looking at yourself and your situation, how much money do I have? You can't lie to yourself, obviously. So you can think to yourself, okay, well, I have at least 10% down, maybe 20% down if I need it. Well, that's maybe you're in good shape. Now, if you're like, I can probably get up to 3% down if I tried, you're not in good shape. Okay, because down payment is just a small part of what you need. You also need money for closing costs, appraisals. You might need reserves, like I said before. You might have to buy down the rate, especially in this market. Okay, so there's certain things that you must be prepared for, right? So that's why it's good to sort of be honest about it or open about it when you're speaking to your loan officer. But just ask yourself, do you have any funds? And of course, ask yourself if you have a 401k, because a lot of people who told me they don't have funds, they don't realize that they have a 401k. Right? They don't realize, oh, well, yeah, I have a 401k. Well, that's considered funds. We can use that. In fact, that's one of the most popular ways to put it down towards a down payment or closing cost is 401k, right? They actually allow you to draw for your 401k. They call it emergency or whatever, right? So it's a mechanism that's built in for you to use towards down payment. Okay. So ask yourself these questions. Okay. Now, if you don't have any funds, like let's say you have nothing, right? Consider getting a gift if possible from mom, dad, a cousin. Well, I don't know about a cousin, a friend, right? Or brother, sister, right? Also, there's down payment assistance programs, right? Now, I don't like the talking about down payment assistance programs for a couple of reasons, and I want you to kind of think about this yourself, right? If you're at the point where you need down payment assistance programs, and you have no choice but to move, well, then yes, let's talk about it. But if you're just doing it because you're greedy, you're trying to save money, it's not a good idea for a couple of reasons. It's going to be a higher rate, number one. Number two, there's a lot more hoops, a lot more paperwork to fill out. And number three, you're pretty much locked in for a little while, so you can't refinance when the rates are getting better. So there's down payment assistance programs usually have like a catch where you can't do anything for the next 24, 36 months, whatever, right? So let's say the rates were to go down next year. Well, you're not allowed to refinance because you have a down payment assistance program, right? That was part of the agreement that you made. Now you might be able to do, but there'll be a large fee, which might not make it worth it refinancing. Okay, so there's certain stipulations that might make down payment assistance programs not attractive, and you should only use it if you absolutely need it. And when I say absolutely need it, that means you need to move. Your house is, I don't know, the house that you're renting is like on fire, right? And you have no choice but to move out of this house. And you're paying a crazy amount of rent, and you can afford a mortgage half the payment, and you're happy with the house for half the mortgage, then it might make sense, right, to make that move, okay, and use down payment assistance programs. But if you're just doing it because you just want to have cash, it's probably not the smartest idea. Okay, and that's something I should have talked about in the beginning, and I'll probably talk about that after the presentation. Are you really ready? And do you have a good reason why, right? And yeah, I'll talk to you about that after I finish the slides. Okay. Do you have student loans? The reason why this is important because a lot of people were in forbearance during COVID, and it wasn't even something that they chose. It was something that was sort of just kind of enacted or created, something that how do I put this? It's almost like they automatically assign people to forbearance, and it was not their choice, right? And that's actually a really bad thing because if you're under forbearance for a student loan, which is a government debt, then how can you confidently say that you would qualify for a mortgage? Right. So you have to get yourself out of forbearance before you can actually purchase a home, which can be a process in itself. Right. So that's why I asked this question for people when they're applying. And I'm asking you to ask yourself now, do you have student loans? If you do, are they under forbearance? What is their status? See, I would say about 50% of the people I talk to when it comes to student loans, when I ask them, what is the status? They're like, I don't know. That's not a good answer. Okay. And if you don't know the answer, you're not ready to buy a house, right? Because you need to get your own personal finances that you're already paying in order and managed and intentional before you start trying to buy a house. Okay. And, it's not that there's anything wrong with trying to buy a house when you have all these things going on. It's going to make things a lot harder, and actually can be a showstopper. I've actually had loans that just died because of student loans. Okay, so it's very important that you kind of get your ducks in a row. Okay, so that's a really important question. Do you have student loans? If you do, what's the status on it, right? If you don't know, then it's time to find out, like right away. Okay, so again, student loans is one of those things where it kind of sneaks up on you, right? Especially because of like I said, the COVID thing. A lot of people were putting student loans that were under forbearance, and they had no idea, and they just said, okay, whatever, I don't have to make payments, and that actually hurt their chances of being able to qualify to buy a house. Okay, so take that into consideration. The next thing is, again, I was talking about deferred forbearance, whatever. And another thing to consider when it comes to student loans is, where your student loans are going to affect your buying power, right? Because you might have an income driven payment, maybe $0 a month, whatever. But then there's also new calculations, depending if you're going FHA or conventional. Let's say you're on deferment, you're not making any payments, right? Well, we still have to consider those student loan payments in the future, because in the 30-year process of paying this house down, you're eventually going to pay down your student loans. So we have to figure out how much would that affect your ability to make a payment, right? So we might calculate 1% of the total debt per month. We might consider 0.5%. It depends on your loan product, okay? So again, that needs to be taken into consideration. So this question is a question where 9 times out of 10, when there's a red flag, the person I asked about it in the beginning either said they didn't know or they lied about it, right? What I mean by that is I ask every person this question, and I still inevitably get borrowers with some sort of red flag, right? So even though I'm asking it, I don't always get the answer I need, right? And not to say that they're lying to me. Again, red flags could be anything, right? But the reason why I ask this question, and the reason why you should ask this question, is you don't want to be caught surprised, number one. And number two, I want to at least know I tried to figure it out, right? Just like you, as a future homeowner, try to get your ducks in a row, right? So don't go in blindly, ignoring all the things that happened in the past, saying, "Oh, I had a bankruptcy before and had trouble there, but yeah, I haven't heard anything from them yet, so I'm gonna go ahead and just power through." No, that's not how it works. Okay, you have to be ready. You have to, if let's put it this way. You might not be able to handle it. You might not be able to manage it right now, but at least you're aware of it. That way, when you talk to the loan officer, you can bring it up, right? So when I ask the question, do you have any red flags? You already thought about this question and you have an answer to it. That is way better than you going, I never really thought about it. I don't think so. No, there's none. And then we find out at the very end, right before you're about to get to the closing table, that there's a red flag. Okay. And trust me, it's happened before. Okay, so red flags are bankruptcy, foreclosures, money owed to the IRS, student loans in default, back child support. Are you being sued or a party to a lawsuit? Example: divorce. That's considered being a party to a lawsuit, right? So if you're in the middle of a divorce, it's really important that you tell the loan officer that that's happening, right? Like, I know it sounds maybe not our business, I don't know, but especially in Texas and community property states, it's important, because if you're in the middle of a divorce and it's not final, when you buy your house, there's a chance your spouse that you're trying to divorce with has rights or claims to that house, which is not a good thing, right? Not just for you, but for the lender. Okay, so ask yourself, is there anything I need to worry about? Is there just something that I needed to either discuss with the loan officer or think about, right? Do you owe back child support? Do you have a, child support that you haven't been paying on, right? And you're like, well, I've never heard anything, so I think it's good. Well, no, there's a chance that it might come up in some sort of background search, okay? Or it might be on your credit report. Who knows, right? So think about things like that, right? And that way, whenever you talk to a loan officer, ultimately you're prepared to have the conversation. Okay. And this is of course the the slides, whatever. Um, so again, what another thing that I want to talk about in terms of where do I start in the home buying process? I talked about, ask yourself these questions. Are you ready? Are you mentally ready? Do you have things going on? Are you switching jobs, switching companies? Are you in the middle of a divorce? Are you pregnant? Again, I can't speak on women, so I don't know. I've heard of women buying houses with no problem being pregnant. Again, I'm just thinking that that's a life thing that's going to, possibly get in the way, because if you're in labor, you can't sign paperwork, right? But again, I don't want to speak on women, right? So, and no problem, Christina. Really appreciate that. The question I want you to ask yourself, on top of all that, is: are you mentally ready? Right? Like, are you motivated enough to go through this process? Because once you get involved, it's really hard to get out of it, right? So what I mean by that is, let's say you are ready, right? And you've done the math, you know exactly how much you need for down payment, you know how much you need for closing costs and appraisals, whatever. And you go all in, right? And it turns out that it's going to cost more than you thought it was going to cost because of the interest rates, or maybe there's some repairs that needs to be done. I don't know, right? Just there's unforeseen expenses that are required, right? Are you ready to deal with that? Are you mentally and emotionally ready for that to happen to you? Or are you going to lose your mind because it wasn't as perfect as you planned it out to be? Right. So being ready isn't just being mentally prepared and having a plan, but being ready is also like, are you ready to go through the ringer? Are you ready to run into a lot of unexpected surprises that may cost you more time, energy, and money? Builders are a great example of that, right? Anyone who's bought a house with a builder, at least 50% will tell you that there was a delay, right? And those delays are painful. Okay. Like, they affect their plans. They affect, like, they've already moved out of the house or whatever, right? They got to pay extra money. They're living in a hotel, whatever, right? Builders are really great at creating a lot of surprises, right? Are you ready for that? Right? Are you ready to be delayed a month, 2 months, 3 months? Right? Think to yourself, if I was to buy a house, start buying a house, am I prepared to be offset by 6 months worth of expenses, time, energy, where I'm living, my plans totally being changed? Am I ready for that? Right? I'll give a really great example. How many times have I heard people tell me, or I've heard the story of someone they need to sign paperwork by a certain time because they're going out of the country, right? I have to sign paperwork by this day because if I don't, then we can't close because I'll be going out of the country. If that's the case, you're not ready to enter a home buying transaction. You can't plan a out of the country trip while you're in the middle of this transaction, because shit happens, right? Delays happen. If you can't make you cannot make yourself available to finalize the transaction because you're going to be on a plane in another country, you're not ready to be involved in some sort of real estate transaction. I don't care what you say, right? You're not, I call that physically ready. You're not physically ready because you cannot be physically be available to close the deal, right? Like, when someone tells me I need to close by this time because of if you don't close by this time, I won't be able to sign paperwork because I'll be out of the country. Well, that's your problem because you're not physically where you need to be to sign the paperwork, right? Yeah, you can blame me all you want as a lender because of the delays, but the delays could be for whatever reason. But the truth of the matter is, if you know anything about buying houses, there's going to be the possibility of delays. So shame on you for not being prepared for that. Okay. So ask yourself before you even think about buying a house, and you ask yourself, where do I start? You start with yourself. You start with you, right? Am I ready? Am I ready to get involved in a really, really big deal? Am I ready financially? Am I ready mentally? Am I ready emotionally? Am I ready physically? Am I ready? Right. And the questions I had earlier will help you figure that out. Right? Because those are the questions I'm going to ask you, and some of my real estate partners will ask you as well. And if you don't have good answers to those questions, you're not ready. Right? We pre-qualify, right? If I ask you, do you have a job? And you say no, you're not ready. So you shouldn't even have talked to a real estate agent or loan officer. You should already ask yourself the question and fix that before you even decided to buy a house, right? So the whole point of this video, or the whole point of this class, or whatever you want to call it, is where do I start in the home buy process? You start with you. You start with yourself, right? And I gave you a few questions that you can ask yourself, but you can just do some research, right? And find out, are you ready? But be real about it. Be honest about it. Be mature about it. Be an adult about it, right? Don't get into a real estate transaction for the fun of it. That's stupid. And a lot of people, and I talked about this in 2019, 20, and a little bit 2021. A lot of people are getting real estate transactions when they shouldn't have, because of the low interest rate. The interest rates are so low, it was like FOMO. Like they didn't want to miss out on the low rate, so they're entering the market unnecessarily, right? And they weren't prepared for the BS that they had to go through in order to make this happen. And it created a lot of stress for everyone else involved. Okay. So ask yourself, not only are you ready, but is it the right thing to do? Like, should you be in the real estate market? Should you buy a house? Right? Not just because do you qualify, or do you have the money, or you have the funds, but does it make sense? Right? Does it make sense to get yourself involved or tangled up in a real estate transaction? Because again, it's a big deal. It's a lot of work. It's something that you have to physically be ready for. Don't get yourself involved in a real estate transaction if you plan to leave the country. Right? So again, ask yourself, does it make sense? Are you ready? Is it something that you really want to get involved in? Ask yourself those questions first. And then once you get a positive answer, then you can decide if you want to talk to a real estate agent or a loan officer. I myself will tell you talk to a loan officer because you don't know what you can buy without qualifying. But of course, real estate agent will tell you should talk to a real estate agent because they know the market, etc., which is true. Right. And they can refer you to a good real estate agent. And that would be the exception I would make. If you do have a real estate agent that you love, know, and trust, you should talk to them first and then have them refer them to a real estate, to a loan officer. Hopefully that'll be me. Right. But yeah, that would be my exception as to who you should talk to first versus real estate agent versus loan officer. Right. But the truth of the matter is, I think it's okay to talk to a real estate agent first because they're going to know more about the market. You need to know where you want to live. You would need to know what price range you're looking at, what your budget is, and they can help you figure out, is this something that's realistic? Is it something that can work out, can actually happen? Or are you not ready? Right. Final note, I have people who tell me that they don't want to get into the real estate transaction because their interest rates are too high. Well, you don't know everything apparently, because interest rates are something that can change constantly. But now, because of the interest rates, everyone having the same mentality as you do, there's less buyers out there, so there's less demand. So there's sellers out there who are desperate to sell, and they're willing to make deals. They're willing to lower the prices. They're willing to make concessions and do whatever it takes to get their houses sold. So therefore, they're more willing to negotiate. So you can actually get a way, way better deal today than you did last year. And what do they say? You marry the price, but you date the rate. Right? The rates might be high today, but you can always refinance that later on. Whereas the price is the price. Whether you buy high or low, it's not going to change. You can't get a refund on a high price, right? So if you can position yourself to get a really low price for a house, that's the best position to be in, because you can always lower the interest rate by refinancing later on. Okay. So hopefully you learned something today. If you have any questions, give me a call, text me, email me, whatever you like. This is Larry, the robot maker and robot general and veteran mortgage advisor, Larry the mortgage guy, whatever you want to call it. And you can call me anytime. Like I said, here's my information. I really appreciate it. And that's it. I'm out.